second question on the overseas front, 497 keys. I think, is it fair to assume that the Nile Cruiser and Alzora, except apart from that, mostly are owned assets?
Okay, so let me just take a step back to answer the questions that you're asking. I think, I don't know if you would really like to spend the time in a face-to-face meeting to get the data points. These are
Sure. Yeah. No.
So we can find a way for you
Sure.
to get.
I will get away, but just from the structure point of view, how should we look at it in the sense of what?
I'll give you a general overview of the company structure, which you may find it difficult to understand from presentations, etc. So EIH Limited is a flagship company, where our total balance sheet size, of course, now we have investments in several subsidiaries, associates, and joint ventures.
Okay.
Right. So among the fully owned subsidiaries are EIH International, which EIH is a wholly owned subsidiary.
Sure.
Let me cover the international part first, and then I'll come to domestic.
Sure.
So international has another step down subsidiary called EIH Holdings.
Okay.
And between EIH International and EIH Holdings, between these two companies, the assets and the investments are made in the foreign locations. Okay. So one of the companies which holds or which has the 𝗂𝐵𝐼 Bali, then this two companies together own 70%. Okay. So that's a subsidiary for us. Similarly, in Lombok, we own 96%. Okay. So these are the two subsidiaries in international. Among the associates, there is a JV which holds the 𝗂𝐵𝐼 Mauritius, which is a 50-50 JV. And the rest are, we have a small stake in the 𝗂𝐵𝐼 𝐒𝐮𝐻, which is about 10%. The 𝗂𝐵𝐼 Marrakesh, we own, EIH Holdings and EIH International owns about 47.9%. And the rest are all pure management contracts. So whether it's Alzora, whether it's the 𝗂𝐵𝐼 Zara, and all other properties, those are all saying. There are some other hotels also which are part of the 𝗂𝐵𝐼 group as a whole, but not part of EIH. So those are directly managed by 𝗂𝐵𝐼 Hotels, the private company. Okay. So this is the international, kind of format. And the total investment in the books of international, or total investments that EIH has done, it was done, of course, way back. From since the last 30 years or more. Sure. And gradually the investment in dollar terms is currently at $106 million. Okay. But obviously the investment rate is an average rate of about 40-45 rupees. Okay. So the total is about 500 odd crore of investment. Okay. Right. So this is international. On the domestic side, the subsidiaries that EIH has is Mumtaz Hotels Limited, which owns the 𝗂𝐵𝐼 Amar Vilas, where we have a 60% stake. The Wildflower Hall, which is Mashobra Resort Limited, that's a JV with the Himachal Pradesh government, where EIH owns 79%. And the balance is owned by the government. Okay. Besides that, we have EIH Associated Hotels is an associate, where EIH owns 36%. Okay. So essentially, if you were to look at it, our total investments would be in the range of about 800 crores out of the balance sheet, right? Out of which the largest investment I told you, we had one more investment, major investment, which was EIH Flight Services Mauritius. Yeah. That we disposed of last year. That was a loss-making business, and we disposed of last year. So out of this 800 crore worth of investments, majority of it is international. A part of it is EIH Associated, and then the other subsidiary companies that I know. And of course, we have some land parcels, which is part of our land. Okay.
Now, so just coming to the fair bit of detail mentioned in the annual on your presentation slide. Now, just want some highlights in sense. On the timeline front, effectively, do you think, I think what's level of, I think, confident are we in terms of getting this in timeline front, or do you think there could be challenges? And secondly, just between, if I look at the last year's annual report, there was a Doha.
Sorry, sorry, I couldn't hear you. I
Yeah,
think,
am I audible now?
yeah,
Yeah.
fine.
Yeah. So firstly, on the timeline front, in sense of mentioned in the presentation, in the sense, do you feel there could be a challenge in terms of the expansion, or do you think those are fairly conservative timeline and could be happening on fairly, we'll be able to manage this timeline? And secondly, on the expansion pipeline, there was this property of Doha mentioned in last year's annual report, 237 rooms, and somehow that I found apparently missing from the presentation part. So any reason for that? Yeah.
Yeah, Doha was actually the whole target was the World Cup,
Okay.
and that was a managed property. So obviously, we have no role to play unless and until the owner is able to finance it. And there were some issues there, and therefore the project is currently on permanent hold. So we've
Okay.
chosen to keep it out of this thing because we don't have visibility on when it's going to happen or what is going to happen. If it ever happens, then we're going to bring it back again. That
Sure.
is one. Secondly, we are extremely cognizant of the fact that growth is a very important, or probably the most important piece for us right now. And the
Yeah.
company is really seized of this whole matter right up
Yeah.
to the board level. And I think we have mentioned in our somewhere in our calls, etc., that the the strategy of the company is in final stages of getting a sign
Yeah.
off, uh, and it should be done in the next 2 months or so.
Okay.
But while we are doing that, it is not that work has stopped. So therefore, the projects that we have mentioned are all definitely going to come. There's no question
Okay.
about that. And it will, I mean, it will be as per the timelines that have been mentioned. The reason why I can confirm that is because we are doing our capital allocation, etc.,
Sure.
in accordance with that. So there's no question of these projects not coming on time. And we have had track record of doing delivering on times that we have promised. For
Yeah.
example, the Oberoi New Delhi, it was a major renovation. The hotel was closed down for 1.5 years, and the hotel was opened exactly at the time in which we
Sure.
confirmed it. So I don't see any challenge in case of the timelines that have been provided.
Sure. Sure. And when you spoke about, mentioned in your comment about that, probably you are fairly close to signing off. So this includes those 11 hotels which were under active discussion as per the last quarter's discussion we had, right? Including those, or do you think largely the expansion pipeline?
So first and foremost, what we are doing is to internally finalize, looking at our capability, looking at our appetite,
Yeah.
looking at most importantly how many hotels we want by
Sure.
FY30 and
Yeah.
in which locations we want to be present. That is getting formalized.
Hmm.
And once that gets formalized, we will know the years in which we are targeting. So it will be a very proactive approach to target how many management contracts we're going to do. We are not a believer that all cases should be management contracts. We don't believe that
Sure. Sure.
because
Sure.
the owned hotels actually the profits that the share of profits that a company enjoys with owned hotels can never be achieved through management
True.
contracts.
True. True.
So therefore, when I say sign off, what I'm meaning is that the entire strategy will fall into place, and
Okay.
we will know exactly which properties, what locations, which brands,
Yeah.
what kind of, whether it's a mixed use project or whether it's
Yeah.
a single hotel project, leisure, city, everything
Yeah.
decided, and then we have a plan to execute that also,
Sure.
right?
Sure.
And with specific responsibilities on various functions on what they're
Okay.
supposed to achieve. So
Okay.
this is probably the first time in the legacy of the company we are probably getting so structured, and that is also to do with the changing times. So
Okay.
therefore, hopefully, of course, till we deliver, I think there's no point speaking about it.
Sure. Sure. But yeah, that's where my next question was. In the sense, clearly, over the period past few years, obviously we had one of the best balance sheet, and obviously that helped us in good stead in terms of challenging COVID years. But definitely from the cycle point of view where we are today, Especially, I think clearly there is probably, I would say, lack of capex, but clearly some degree of slower addition. Probably, I think at least it perceives to be there from investor community that we did miss fair bit of cream of this. Clearly, what we saw post COVID, demand, pent up demand, or whatever it is in sense of demand, revenge demand that we saw clearly. I think fair degree of probably we missed. We did capture, but clearly part of it we did miss. I think could have done better with the better, more properties under belt.
No, absolutely. There's no denying the fact that if we had more properties, but let me take a little, detour from what we are discussing. See,
Sure.
again, what is the philosophy of our group? Our philosophy is to be the best, not necessarily the biggest. That's a very, very clearly articulated strategy. And the reason for that is we believe that if we had, for example, if we targeted 1,000 hotels or 500 hotels, we would not be able to deliver the quality that we are
Okay.
delivering today. We want to be a premium niche player.
Okay.
We want to be the best in ARR, which we time and again demonstrate. If you see my analyst slide also, that shows consistently over the last 4 years, we've always maintained premium in our RevPAR, and that is by virtue of ARR. Right? Not from an occupancy side, but from an ARR side, we are maximizing RevPAR. So that is the journey that we wish to follow, and we feel there is quite a bit of steam still left, right? And if you look at the pattern of business now, let's say from the COVID, from the time the business started opening up, it was mainly the leisure locations that were doing fantastically well. Right?
Okay.
This phenomena has changed quite a bit. The reason why, if you really go into a comparison amongst peers, right? I don't want to name anybody, but if you do it yourself, if you segregate the management fees part, and if you look at the owned hotels only across the groups, you will find our margins are the best.
Okay. Okay.
Because we have done that analysis, right? And the reason why we do so well is because we are able to command a premium, which we don't want to let go of. So that is one part of the story. The second part of the story, does that mean that we should just restrict ourselves to the number of hotels we have? No. We were very cautious in the last decade. We've opened very few hotels, although some of the hotels were really iconic, the Oberoi Marrakesh, for instance, the Oberoi Sukvilas, for instance. So these kind of hotels, if you want to open a hotel every month, then these will not be iconic hotels. Is what you can't open iconic things every month, every quarter, right? So therefore, whatever we are targeting, whatever you've seen on the slide, are ones which are each of them are well chosen to deliver and maximize profit. So if I were to tell you, if you look at these villas properties, for instance, when they were built, there were a lot of questions, etc. But if you look at the return on capital employed today, you will find they range between 60% to 100%, right? So that is a route that we wish to take. And considering that, the whole strategy is being framed out.
Okay. So that's what my next question was. I think in terms of expansion pipeline, or probably whenever you laid out, I know a fair bit of details will be clear over the next 1 or 2 quarters. But just fair to assume that large part of this expansion, I think whether it could be in subsidiary or probably at the standalone level, but will be in this entity and might not be in the at the associate level. Is that a fair assumption, or do you think
Yeah,
there
that is
also you have?
definitely a fair assumption, because if you see the strength of those or the size of those balance sheets, those are literally, those can do a few hotels here and there.
Sure.
But obviously, those companies do not have the bandwidth and the scale to really execute, very large number of properties.
Sure. Sure.
So yeah, we certainly would. I mean, as of today, we are sitting in a situation where, well, we also had a large amount of debt during COVID.
True.
We did our rights issue, etc. But today the situation is in each company. There's not a single company in our entire portfolio which has any debt. That is not a ideal situation either.
True.
We want
True.
debt.
Yeah.
Yeah. So obviously, if you see the capacity of our company, I mean, you can do the maths yourself, Rishikesh.
Yeah.
You know what EBITDA we did this year, right?
True. True.
You can safely assume a growth on that EBITDA.
True.
So year on year, how much of cash we are going to generate?
Exactly.
You figure that out. right? I don't have to tell you the numbers. You can see, you can do it for yourself.
Agree. Yeah.
If you do an X amount of equity, if you can do, over the next 3-4 years, then you will have at least 50% of that you can take as debt very conservatively.
True. Yes.
So if you take all of that, you see the corpus that we have, right, in order to grow. So if there is opportunities which suit us, if there are, if we have the means to fund it easily, then why would we not grow?
Sure.
Would there be any reason why we would not?
Okay. Agree. So effectively, the way I should understand is from the incremental expansion point of view, you are fairly open to lever up the balance sheet and probably from that
Sorry, I think the connectivity is a little weak.
Hello.
Yeah. I'm losing out a few words. Yeah.
Yeah. So from the way I have to understand is that from the expansion standpoint, clearly a large part of the we are fairly open to levering up the balance sheet and secondly, even from the growth opportunity point of view, we are more the incremental expansion will be slightly on the ownership heavy rather than management contract.
I think it will be a fair mix, is what we would say. Not only a fair mix between the ownership and the managed model, but also we are very strongly looking at mixed use. So which we have been saying in the past as well, that our property or the land that we have in Bangalore, that we are working on a mixed use model.
Okay.
So that will also de-risk our business to some extent. But yes, if you were to understand what that expansion is likely to be, firstly, you'll have to wait a little till our strategy document is signed off by the board. But what we are targeting, I can tell you that we are targeting an X turnover, which will be several times the turnover that we have today. And therefore, a particular level of profitability and return on equity.
Yeah. So now coming to the written discussion, now clearly on reported basis or even when I look at it, definitely these are fairly strong return ratios and obviously partly explained by clearly lower capex for past decade. So fair to assume that on the existing portfolio, large part of our portfolio is fairly mature property, and I think probably, or do you think that even on international side, or there were some properties where do you think there are some levers where probably that could pull up the return ratios?
There definitely are levers to pull up the return ratios, and we are nowhere close to our optimum. And there are several reasons what I would give, which I think our CEO Vikram has mentioned quite a few times as well, that we still believe that the rates in India, despite what most people feel that rates are high and stuff, we feel that there is a lot of potential because compare the rates and the facilities that we offer and the services that we offer vis-a-vis what you get in Europe and US and other places, and look at the rates that they command. We may not be a Europe and US, but at least we can be better than what we are. So there is definitely an upside there. Secondly, purchasing power of Indians have increased, by a large margin, especially the growing upper middle class. I think which augurs very well for our kind of brands who really value, quality over quantity and stuff. So yeah, I think these are some of the things that I think are important to be kept in mind.
Sure. And
but to complete the answer to your question, I think your question really was that whether there is enough steam left.
In the sense, from the point of view that obviously it's a long gestation business, from the point of view of setting up a property and getting to the return ratio.
There is one more point I would like to add here. Again, if you compare between various chains in the industry, you'll probably find that we spend quite a bit of our resources in upgrading and renovating our products, right? That is on a continuous basis. And the reason why we do that is to keep it contemporary, right?
Okay.
The Oberoi New Delhi was a case, right? It's one of the most modern hotels, right? With the most modern facilities. We did the OFS, the flight services business in Mumbai, state of the art. We completed 4 floors of renovation at Trident Nariman Point.
Okay.
Under construction is already 20 service departments at the Upra Mumbai. We're opening new restaurants to replace the ones. So the capacity of earning actually increases,
Yeah.
right? Despite the properties getting older. So there
Sure.
is still a lot of steam left, and we are hopeful of. We want to maintain that as well. I mean, instead of investing only in new properties, it's
Yeah.
important to do all these things which can generate a lot.
Sure.
I mean, if you look at individual hotels, for example, every single hotel almost has done a record profit this time.
Yeah.
So
Yeah. Yeah. So I think obviously, I think clearly, I think you guys are fairly in the sweet spot. But so from just hold on, sorry. Yeah, just from the standpoint where I was coming to, in the sense there are from domestic perspective or international perspective, are there any properties which we have probably launched it during COVID or probably slightly before COVID, and hence there could be from that perspective those are yet to mature or reach to what we have in terms of fairly matured portfolio? Do you think there are?
Marrakesh, biggest example.
Okay.
Marrakesh was launched in December 2019.
Okay. 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 Okay.
So
Okay.
so
Yeah.
there was
So
a
that.
great time to launch. As you can understand, and
Yeah.
therefore, and that property, Touchwood, is currently doing ARRs of in excess of $800 per night.
Wow. Okay.
So that's an average room rate. So
Okay.
obviously, yeah, those certainly, I think Marrakesh. There are few other properties which are also in the pipeline for very major renovation.
Okay. Okay.
So which we will be carrying out, of course.
Sure. Sure. And from the demand perspective, now I think clearly one aspect is obviously it has been a fairly a favorable cycle after a long time, almost a decade. If I have to look where probably you guys have a pricing power in terms of, and secondly, obviously supported by a fairly strong demand sentiment from the consumer end also. Now, where I'm coming from is obviously when I look at the domestic travel industry as such and the entire ecosystem, I think clearly one part is clearly your hotels, which are definitely have a pricing power. And the other aspect is obviously the travel ecosystem, even that has now gained a fair bit of pricing power. Now, my question is, in that case, do you see, have you seen any noticeable trend probably that probably in terms of future booking where probably do you feel that could have some impact or moderation on demand? Because especially when I look at our portfolio, I could be wrong here, but our portfolio is slightly leisure heavy if I have to
No,
use
no,
that.
no, it's the other way around. No, no, not at all.
Okay.
It is the other
Okay.
way around.
Okay.
So
Okay.
more than 50% of our inventories, you look at Bombay,
Yeah.
just Bombay has how much? More than 1,000 rooms.
Yeah. 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 Yes.
So no, I'm not sure if I've understood your question correctly, but uh,
And my question was in the sense probably if you have fairly a ledger heavy portfolio, it becomes slightly discretionary compared to probably corporate heavy, where probably if you have to travel, you end up traveling in case of corporate. So that's
we
how
are
the.
extremely
Yeah.
strong in corporate with our relationships, etc. In fact, corporate continues to be between 50 and 55% of our overall business.
Okay. Okay. 50-55% of offer.
Yeah. And obviously, corporate rates haven't gone up the way they should have. So there's still a lot of opportunities left there.
Now, now, this is a fair bit of, I would say, perplexing because obviously you guys have shown fair bit of pricing power on the retail end in terms of when guys like or when me or probably a lot of individual travelers or a lot of families travel there when that bookings happen there's obviously a fair bit of pricing power as you witnessed, but I'm not so sure, but clearly from the corporate side when I talk to your peers also, initially coming out of court there was excitement about renegotiation of rates happening, but clearly that has not happened. So any reason do you think that corporate renegotiation has not happened to the extent, or do you think has there been change in terms of renegotiation contracts itself in
No, I
corporate?
think firstly, we won't call it a renegotiation. like we don't like to call, use this term of revenge tourism, because those have all really gone by quite some time back. So I think, see, corporate bookings, etc., are, at the end of the day, those are not retail, like you said, right?
Yeah.
So there will be a pricing push from that end, right? So therefore, that is always there. But that doesn't mean that rates have not gone up. Rates have gone up. Now, it's also a question that, see, the biggest factor that probably has worked for the India industry, or the hotel industry in India, luxury hotel industry in India, is the lack of supply. And supply cannot be built overnight, right? In this segment, in this business. So therefore, and definitely not in the luxury segment. It's not so easy. So the number of rooms remaining where they are, if every player were to think similarly, then everybody would probably increase it. But probably the industry in general, I'm not talking of us, I'm saying industry in general, does not have that belief possibly that, that's the rates, whatever rates that we really command, we can really charge. And therefore, unless there's a concerted move, I'm not saying that there should be monopolized or something, but unless there's a like, look at airlines. Now, if you find that, one airline is charging whatever, and the other airline is where they were, then why would anybody travel there?
Agree. True. So effectively, effectively, to sum from what you can get is, you feel there's still fair bit of room for you to pull up the ARR without impacting much on the demand sentiment, or probably, and might not have any major impact on demand, even if there's further lever.
Yeah, that's right.
Okay. And that will be the largely margin lever, or do you think on cost front also do you have, because we have done a reasonably
No, when rate drop, it's directly 100% to margin.
Okay. Yeah, agreed. But on cost side, do you have anything on the lever, any levers, or
There'll
not
be
much?
No. So see, the good thing is that the employee costs have got rationalized. I
Yes,
won't say that
yes.
they won't grow. They will definitely grow, but
Yeah.
will not grow back to pre COVID levels,
Sure.
because that rationalization has happened.
Sure.
And also, we have been able to build a lot of capacity to be able to cater to new properties. For example, the entire support function runs out of a center of excellence. Now that center of excellence, with every increase, we just added, let's say, Bay Club. No manpower was increased in the support function, not a one, right? Similarly, when we add 5 more hotels, we will not need to increase any manpower, because the same system, same ecosystem can take care of it. So these changes have already happened. We are yet to see the fruits of it, because we are waiting for the expansion to happen and then to be able to see it.
Okay. And from the standpoint of your small this bolt-on addition, like what you spoke about, Bay Club or probably the Cuckoo Coffee, I think, what is the game plan here, in the sense how much do we intend to scale up on this?
So I would give the same answer that Vikram gave.
Okay.
So, these are, as of now, one-off projects. We are shortly to open our restaurant also, which is a high-end luxury standalone restaurant, which will be in the Convention Center. So we want to perfect these businesses that we are getting into. Once we know that we have perfected the art and the whole mechanism, then of course there's a expansion plan that will be looked at. Yeah. But we want to get it right first time, because if we don't get it right, then there's no point in expanding.
Okay, cool. Got it. And from the gross block perspective, I understand you discussed about the I think aircraft services that have probably been hived off, but there's boats and aircraft, two items on the gross block. So these are fairly related to business needs, right? In terms of what we have in terms of
No, the
services.
boats are entirely for business. So those are cruises, actually.
Okay.
Yeah. So we had a boat in the backwaters of Kerala, which currently is not operational. But internationally, if you see, we have, right, the group has actually 2 boats on the cruise on the Nile, 2 cruises on the Nile, and we are actually coming up with 2 more, which are smaller ones, but those are there. So the cruise business we've always done well, and they are phenomenally well doing businesses. And the aircraft, of course, is a corporate aircraft, which is chartered out also for requirements, but also used for internal purposes.
And I think you did spoke about that last decade was fairly in terms of where you guys went fairly slow. So just from, and clearly it like a draws down from your
Sorry,
one thing. Hello, am I
sorry, I
audible?
missed you. I missed the
Yeah,
last few.
yeah. So one thing is clearly you spoke about going slow last decade. Clearly, the room addition has been fairly. We have added fairly limited rooms, but from the investor standpoint, where I'm coming from is that what is the role of there are fair bit of when I look at the shareholding pattern, there is a Reliance and there's ITC also. Are there is there any active involvement of these market shareholders in your any operation anyway? Say something like Reliance, ITC I understand, but clearly Reliance.
Yeah, of course. Reliance, Mrs. Ambani and Mr. Manoj Modi are on the board of
Yeah.
EIH, and they are very active directors, non-executive directors. Their suggestions are really most helpful, and they do bring about a lot of, and they give a lot of insight and guidance to the management on strategy, etc. So obviously, and I think that's a good thing because on one side we have the support uh, of large shareholders, and also I think in a way, being in the board, it's
Yeah.
important that somebody is there to push. So which
True.
is a good thing for us too.
Yeah. 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 Perfect.
But when you talk of returns to shareholders, I think you mentioned this a couple of times. I
Yeah.
must tell you one thing, that I don't know which metrics you really follow as an analyst. Um, but would it be, let's say, earnings per share, or would it be, I don't know what exactly would you follow? Maybe leave the growth part aside for the moment, because I've
Yeah.
already articulated on that. But
Yeah.
if you see the earnings per share is pretty decent.
Yeah,
Uh,
yeah, perfectly. So I think more importantly, see, eventually I agree from what you spoke about. I think growth, I understand it's probably where you are now getting into the game. I
yeah,
think historically what for us what is very critical in terms of is a capital allocation where we have done well, and that is getting reflected in terms of our ROC and in terms of going slow, ensuring the properties mature.
yeah,
So I think from for us it becomes critical because I think one of your obviously luxury peers, I think clearly we saw what happened in terms of last decade of capital allocation. Then you have dilution, multiple dilutions. I
yeah.
think we are frankly very wary of this situation effectively.
Hmm.
Obviously, touchwood the cycle has been clearly beneficial for everyone, but I think that becomes slightly we become slightly wary of such situation in terms
No,
of
you are
adding.
absolutely right. I couldn't agree more. And I think also the fact that, we are happy that many people want to really grow very fast. We are good wish, our good luck to all of them. We are not so keen on going so fast. Number one. Number two is, let's say we got into, and this is a hypothetical point I'm making. Let's
Yeah,
say we did 10 hotels a year, all 10 management
yeah,
contracts,
yeah,
right? Let's say mid-sized hotels, all right?
yeah.
That's what people generally do, right? 200 to
True,
50
true,
rooms.
true.
So what do you think is the management fee that one would earn from there? Let's say 5 crores maximum.
Sure, sure,
For-
sure, sure.
So for 40, 50 crores,
Yeah,
imagine the kind of bandwidth, the
agree.
management bandwidth that goes in.
I am in
You'd
a
rather do
hundred.
one hotel where you earn 100 crores.
I am in agreement with that. So I am frankly I am also not a big fan of this asset light approach. See, on paper it sounds right, but eventually it does pulls up lot of bandwidth, and in terms of number of contracts you have to sign,
And it
it
does
becomes
work,
a
I would say, in terms of if you look at the foreign brands who have
yeah,
largely been successful.
sure,
See, in case of foreign brands, Indians are different. Let me say that first. This cookie cutter approach that
yeah,
is followed in many Western countries may not necessarily gel in India, right?
true,
Guests who travel to let's say you went to Europe and most pick up, I don't want to name any brand, go to any brand, you would
yeah,
have to carry your baggage yourself to the room.
true, true,
You would have to do everything on your own.
yeah,
That's not what Indians want.
true, true,
So
true,
therefore, for them, it's okay to do 1,000 hotels. Somebody does 5,000 hotels, and 5,000 hotels management contract really works because uh, imagine the total. That's a game of the volumes.
yeah, yeah,
So
yeah,
so unless and we won't be able to do that, and we will not do that because
okay,
that will ensure that we kill our service levels,
okay,
quality, because you can't manage with same attention that many number of hotels.
totally,
You'd
totally,
rather we would still do the best profits in the market, but we
okay.
would do it in a very different way.
Frankly, yeah, I will be happy if you guys lever your balance sheet to one time debt to equity or even two times and have give me a much more ownership driven growth. That will be a more bang for the buck for me.
That is true. Yeah. No, I mean we are a little cautious about debt.
Mm, yes,
That's in our DNA. So really to change that, but yeah, we must. I mean with growing costs of capital, we cannot
yeah,
afford to remain debt free for too long.
true, 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 true. I think good from the capital structure point of view, effectively.
Yeah.
That's what my
Plus, if your equity is high, then I mean, you can negotiate good rates. Our average cost of debt is 7.7%.
true.
So
Yeah,
that's something that we enjoy because of the strength of our balance sheet.
yeah, yes, yes. So effectively, then incremental expansion will be fair to assume that largely with the conservative approach, internal accruals, some degree of debt will be there, but not, or what is the maximum threshold debt that we are open to if we have to pursue
Yeah,
expansion?
policy has been to maintain a debt to equity ratio of 20%, right?
Okay.
So roughly about 25% of total capital. That has been our internal benchmark so far.
Okay.
Um, but I'm not saying that could not change.
Okay. Okay.
And plus we could also look at SPVs, etc., where the debt is not on the EIH balance sheet.
Okay. Okay. Okay.
Then we could look at much larger debts.
Sure. But any internal thought in terms of, say, simplifying the holding structure, probably increasing the stake in terms of associate hotels, or any thought we have internally, or do we
These are
intend to
two
keep this?
listed companies. It's not right for me to comment on the holding structures generally, but yes, on an overall basis, there is a definite need to simplify our structures and make
Okay.
sure that, see, these were done at a time when taxation structures were different, laws of the countries were different, FEMA regulations were different. Actually, this all started at when it was FERA,
Sure.
right? So things would have been done with a different mindset. But now with the change, with a different taxability, with all of that,
Hmm.
there's a definite need to look, and we are looking at all of that. It cannot happen overnight because there is a lot of legacy issues involved. Plus, when you go, especially in foreign countries, mostly the stipulation is you need a local partner there. So there, these structures will always remain, um, where you have to have a partnership in some form or the other. I mean, Indonesia, where we operate, for example, requires that the board of directors of that company, they call it a president director, which is really the head of the directors,
Yeah.
has to be an Indonesian, he or she,
Yeah.
right? So that stipulation is there. Now, if you have to operate in exotic locations, etc., this comes along with that.
Yeah. Yeah. And say if we look at the margin,
Sorry, again, I'm losing you.
am I audible? Yeah.
Yeah, it's coming. Yeah, it
Just
keeps
hold on.
coming, and sometimes
Or
it
else I
keeps.
will probably just shut my video off. I think that will be really
Yeah, yeah,
helpful.
sure.
Just hold on.
Maybe I'll put my camera off too.
Yeah. Yeah.
That'll.
So Yeah, I think so. Where I was coming from is terms of margin profile. Now, obviously, when I look at the luxury brands like of Taj or probably you guys are now fairly in terms of 32 to 35% or between that range, 35, close to 34, 35%.
Are you talking of
And
for the company as a whole?
yeah, enterprise level or even standalone level. Standalone level, probably I think will be much higher if I'm not wrong.
Hmm.
So my
I'll tell you one
question,
difference between other
sure,
companies and us, but I'll
yeah.
let you complete first.
Yeah, so I agree that management fees that you spoke about, but so my question is more from the perspective that I think when I look at the fairly mid scale brand or and not even luxury, something like Lemon Tree or probably I know those are not competitors. Those are fairly in terms of 45, 50. So I'm talking more from the luxury brand. Obviously, we can't approach on the bare bone structure like they operate, but clearly from margin perspective, how high can we scale up with this luxury segment where we operate?
Okay, so let me just make the other point that I wanted to make.
Sure.
And that's where structuring also comes in.
Yeah.
So, one of our component of our overall business is the flight catering business,
Okay.
right? So in our case, it this whole unit, and this is decent, it gives about 200 to 50 crores of turnover. So and margins are currently around 20%, but at one point of time, this business did 30-35% margin too.
Okay.
Now, let's say that in case of many others or other players in the market, these are not in the standalone books, right? These are subsidiaries. You would figure out.
Mhm.
So what you get to compare, if you really want to compare the hotel's performance, it has to be apple to apple.
Yeah.
So if you remove this bit, then you will see that the EBITDA margins are actually 40% and above.
Okay. True.
Yeah. Well, and by the way, that business is also doing exceedingly well in the current year.
Yeah. Yeah. So effectively, when from the revenue perspective, now if I look from the console revenue and then there's a standalone revenue, the difference will be largely your Mumtaz Mushabra and EIH holding, and what you spoke about is flight catering business, which is also partly captured in that. That's
Yeah,
about it,
that's it.
at least on the revenue side. I think
Yes.
okay. 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 And from the near term 2, 3 years perspective, whatever we are, at least the pipeline that we have mentioned on the presentation, large part of this will be on the standalone side, or do you think a part of it will be on the console? From the ownership point of view, owned hotel point of view, I'm not asking from the management, but whichever is the owned pipeline
Well,
expansion.
if you can, I mean, I don't have it in front of me on what we had presented because this is an evolving picture, and more number of properties are continuously getting added to it to this list, which we have still not come out with publicly.
Sure.
But what are the ones? If you just tell me, I'll tell you which are owned.
Bandhavgarh, sir, Bandhavgarh, it will
Bandhavgarh is
be a
managed.
yeah,
Yeah.
it's managed. Bandhavgarh. So owned, if I remember correctly, it's Rajgarh, which is
Yes.
owned, which is 25. So that will be in standalone, right? Or that will be in
It's
sub.
standalone, 100%. Yeah.
And Tirupati will be owned by subsidiary. So which will be
Yeah.
which? It will be your
Mumtaz.
which? Mumtaz. Okay. Okay. And apart from this, Goa, Oberoi Goa and
Goa
Trident
is
Goa.
owned. Owned.
Owned. It's standalone. It will be stand.
Yeah.
Okay. 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 And on the
I think there's
there
one
was
Hebel. I don't know if Hebel is there. Hebel should be there. Hebel Bangalore.
I think I missed it. Could be. Yeah.
Yeah. So that is a mixed use project that is also owned.
Yes. Okay. And
Yeah. I don't
sort
think it's
of
a bandwidth. Even now, I'm missing your words.
no, no, from the Kosamui project. Kosamui. In last year's
Uh,
annual report mentions about
yeah.
that.
Koh Samui is not moving.
Okay, it's not.
We've not. It's not closed either, but it's not moving also.
Okay. 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 It's not
Right.
moving as of now. So effectively then from the whole incremental capex perspective, what should be our next 2 years target from the capex standpoint?
See, I would wait for this,
Okay.
strategy exercise to get over. But let me tell you that the projects which are under active construction, especially Rajgarh is probably the only one that will consume capex this year, apart from the renovations.
Okay.
The others, in the initial years of construction, they really do not involve too much of capex. So it will be pretty moderate. I mean, there's obviously regular capex which is around in the range of 40 to 50 crores a year, roughly, and that's maintenance capex. But apart from that, there is only one project that we are actively spending right now, and the moment the other projects pick up, they will be spent, but they will be phased over the next 3 to 4 years.
Okay. Okay. Okay.
Yeah.
Okay. And I think finally from the I think just from the we did discuss on the tariff side. Now obviously we did discuss from the occupancy side. Now this is a general industry trend I have observed. At least I think Q4 was a exception, but what at least Q3 or some other trend I remember.
Sorry, is your question complete? I couldn't hear the
No,
last
no, no.
part.
So this cycle, if I look at it, industry is more focused on ARR maximization as compared to occupancy. So do you
Okay.
think that there's a probably intuitively there's a under probably industry is more focused on that, and that will continue for next 3 years, according to 3 to 5 years from that because lower supply from that perspective.
See, I think occupancy is everybody is doing well, right?
Okay.
They should do well. There's no reason why they should not do well because, as we discussed, supply isn't going to come overnight. And we closed our year at close to 80% occupancy on an average. So
Okay.
it's an unheard of kind of a situation ever. Uh,
Sure.
so I'm assuming that the other players are also similar. I don't remember the exact numbers of others.
Yeah.
But if occupancy is around 80%, there is only that much that you can do.
True.
Technically, you can of course do whatever, but at the end of the day, there are weekends, weekdays issues in cities and all of that. So there is
Yeah.
only that much you can do. So obviously, everybody's looking at rates, but there
Yeah.
I think again, I mean, where we feel we have an edge is because of our continuous
Yeah.
kind of focus on quality and service and guest delight. Probably we have an edge on the ARR side. That's what at least the
True.
data.
Okay. Yeah.
Right.
Yeah, and finally, just from the Trident Mumbai, I think I'm talking more from the Nariman Point perspective. Now, this is just a question from standpoint that when I look at the city itself, a large part of the business district had moved to Bandra, BKC, and on those side. So, has there been any material impact on the occupancy, or do you think they have been able to offset that?
Actually, we are looking forward to quite the opposite when the coastal road completes.
Okay,
It's the coastal road is ending 1 kilometer away from our hotel.
true, true. Yeah,
Right.
yeah.
So, first and foremost, both our hotels are doing very good occupancy and very good rates.
Okay.
Especially the renovated rooms of Trident Nariman Point is doing very good ARRs, right?
Okay.
So yeah, this was a issue. I mean, I have been with the company long enough, so I can tell you that these discussions used to happen in 11, 12 when businesses started moving out, diamond industry and all that, moving over the other side of the city. But I think, firstly, it has balanced now, and we actually, if you look at last year, our performance at Nariman Point was better than our performance at BKC, our own
Wow.
performance.
Okay.
Yeah. So that is one. And secondly, these hotels also have a fair share of business from Middle East and other countries.
Okay.
And thirdly, when the coastal route comes, I mean, you probably will be in a better position to tell me if for commuters in Mumbai that will make any difference.
Yeah,
Uh,
it will definitely. Yeah.
yeah. So then, obviously, you can't match the views of South Mumbai
Yeah,
uh,
agree.
with facing buildings in BKC.
Totally. And do you feel? I think clearly I think this cycle one thing is different or probably lacking is a probably participation of foreign tourists. So where are we on that front? In the sense, do you think normalization has happened or yet to
No,
see?
not yet. No, not yet. So we are still way to go. That's why I said that, if you're looking at a performance of last year, which at least I'm just guessing, I don't have the numbers in front of me, but I think on an average, we would be still about 30% below what we used to do in foreign occupancy. And
Okay,
we have not even seen the increase in rates, etc., that one can expect.
okay, okay,
That most likely should come back, because in the immediately succeeding months after COVID, even when borders opened up, it was not easy for people to get visas, etc., and come.
true,
Right,
true.
there were huge problems being reported in the UK also, who were not getting Indian visas. So, for instance, UK, we've seen really there's a big this thing to be left. So I think this year at least, and the next year, I don't see any challenge, because this momentum uh, picks up the way. I mean, like we dropped in COVID suddenly. Now that it has picked up, how will this travel stop? I mean, I can't see. I mean, I can't see that happening.
Okay,
Um, I mean,
sure.
let's say corporates are traveling today. Can they really stop traveling tomorrow?
No, no, perfect, perfect, true. True. So I do agree in the sense, obviously, that's one, I would say, missing puzzle or probably missing piece in the whole recovery story that we have played out. And that's where I think our hopes are, because that is also a high spending this thing in terms of category when do the customer profiling from that perspective. And hence, that could be obviously one lever where you can probably maximize the ARRs for you.
Yeah, yeah. No, that's our hope. Obviously, nobody can predict the future. We don't have a crystal ball. But
Sure.
if you were to look at it from data that we have,
Yeah.
then we've seen the first 2 months go by.
Okay.
So I don't see any concern as of now. We'll have to keep our ears and eyes open, but
Sure.
I think we are in a sweet spot, like you said.
Okay. So, I think largely my questions are answered, but just one feedback, at least from the disclosure standpoint, I think obviously
Sorry, missed you again.
I think questions
Sorry, I
are
missed
over.
your word.
Hello, am I audible?
Yeah, tell me,
Yeah.
please.
Yeah, just from the feedback perspective on the disclosure, last 2 years definitely those have improved, and clearly we have come a long way. But I think clearly one piece is missing is clearly on the subsidiary side. I think when part of the income, I think consolidated becomes an important piece for the investor. I think it would
Hmm.
be really appreciated if those disclosure, at least on the operating parameters, something like occupancy or probably profits on quarterly basis are available. That would be really helpful for us.
Sure. So you mean the analyst presentations,
Yes,
disclosing
on
there?
the analyst presentation. So you can look at your peers also. They do provide us some degree, like they have overseas property. They do provide some degree of, I would say, I think broad numbers, something like a revenue, EBITDA, and obviously occupancy, if possible. So I think those need not be all details on ARR or everything, but at least the revenue, EBITDA, PBT, or
Sure,
PAT
sure.
will also be helpful.
Sure. So consolidated is more useful for your community, or
Yes,
standalone?
consolidated, sir, because I think your earnings, you will be valued based on the entire asset portfolio of assets. So I
Hmm.
think from that perspective, it becomes very important that part of the income is also from consolidated. It's a reasonably large part, and if the expansions are also happening in that, then it would continue to become larger also. So
Yeah.
from that perspective, I think those will disclosure will really helpful from the subsidiary level, or probably at least broad revenue, PBT, and some operating parameter. Obviously, you can look at the peers, how they give disclosure, at least on the overseas property. I think those level of disclosures will be helpful. Not the entire PNL, but at least those level of disclosure, operating
No,
parameters.
no. Your feedback is well taken, and I'll definitely. I mean, we always look at what others are doing, but we do our own at the end.
Sure, sure, sure,
But I understand what you're saying, and let's see how best we can improve on that.
sure, sir. Thank you for your time, sir.
Thank you. Thank
Thank
you
you.
so much.
Thank you.
Thank you.
Thank you. Thank you so much. Thank you.